On December 23rd, MicroStrategy will join the Nasdaq 100 index. And you know what this means? Over 200 million people will now own Bitcoin. Grandmas in Indiana, Paul Krugman, Jamie Dimon, Elizabeth Warren, Jerome Powell. And the funny thing about this is they still think MicroStrategy is a Ponzi scheme.
So what do you say to people who say, well, it's a Ponzi scheme because every time Bitcoin goes up, you issue more equity and debt to buy more Bitcoin. It just keeps going and going and going.
Yeah, just like developers in Manhattan, every time Manhattan real estate goes up in value, they issue more debt to develop more real estate. That's why your buildings are so tall in New York City. It's been going on for 350 years. I would call it an economy.
Today, we walk through what MicroStrategy's inclusion into the QQQ means for Bitcoin and MicroStrategy over the long term. 200 million people will now own the world's largest and first Bitcoin treasury, whose stock is up 500% this year and has outperformed every single company in the S&P 500. But more importantly, this accelerates the global adoption for Bitcoin. Nation states and companies are going to flock to acquire this asset with a fixed supply. As Matthew Crater says, Bitcoin will infiltrate every nook and cranny in the financial system. It'll end up on the balance sheets of households, corporations, pension funds, companies, and countries. Has Michael Saylor's infinite money glitch started the flywheel of global Bitcoin adoption? Is MicroStrategy's next stop the S&P 500? Let's break it down. This is Dante Cook with Bitcoin Simply. Let's go. Yesterday, Bitcoin made another all-time high, touching $107,857 fiat dollars. And at the same time, Michael Saylor and MicroStrategy hit the news circuit to talk about their inclusion into the QQQ, or the Nasdaq 100 index. Over the weekend, MicroStrategy acquired another 15,350 Bitcoin to bring their total to 439,000 Bitcoin in their treasury. Over the past year and a half, their cost basis has nearly tripled as they've continued to stack larger and larger of tranches of Bitcoin at higher and higher prices. Their cost basis is just now over 61,000 per coin. They're sitting on a profit of $20 billion in Bitcoin. And Wall Street doesn't understand. Why would they do this?
They are acquiring an asset. They're acquiring Bitcoin, just like maybe a drilling company or an E&P company would acquire.
They sell it. They produce or they drill for oil or gas to sell it, and this is expressly to hold it and or to trade it.
Well, they're not trading Bitcoin. They have really
sell it
only
sometimes
ever bought it. They've actually, I don't believe they've actually ever sold.
They believe that this is a trade, something that MicroStrategy is just doing in the short term, not realizing that Bitcoin is a long-term play in the future of capital.
If you think about the Louisiana Purchase, California, and Alaska, we paid $40 million to buy 75% of the United States. Nobody remembers the $40 million. But if you know where the money's going, you should buy the property, buy the future. And in this case, the Lummis plan calls for 1 million Bitcoin acquisition. That's worth $16 trillion to the country. RFK proposed 4 million Bitcoin that would be worth about $56 trillion. There's room for Trump to go beyond that, even $81 trillion in gains. And that's against $36 trillion in the U.S. national debt. So all the capital outside the U.S. and all of the antiquated 20th century capital is going to flow into digital assets. It's going to flow into the Bitcoin network. And the logical thing is for the U.S. to buy it now and own the future.
And just chase it up at any price?
I think just a progressive acquisition of it makes sense.
This seems pretty transparent, pretty logical. The core thesis is invest where the money is going to be, which is why MicroStrategy's inclusion into the QQQ is so important. The QQQ represents where money is going, and its results have been eye-opening. As of September 30th, 2024, the QQQ has even outperformed the S&P 500 7 out of the last 10 years. Over the last 5 years, it's outperformed the S&P 500 by about 10% a year. Over the last 10 years, it's outperformed the S&P 500 by 170%. So what is the QQQ? What is it made of? The QQQ is a passive index fund that has allocated about 80% of its holdings to technology and consumer discretionary stocks. Its investments are 97% based in the US, and here's the breakdown of some of its holdings. Apple represents about 9%, Microsoft about 8.16%, Nvidia 7.6%, and Meta about 5%. So what this means is for every $100 that goes into the Nasdaq 100, $9 goes to Apple, $8 goes to Microsoft, about 8 goes to Nvidia, and 5 goes to Facebook. And as a part of this, 47 cents will go to MicroStrategy, and about $2.1 billion of capital is expected to flow into the asset. I can't state how important this is. Passive investing has taken over the investing landscape because most hedge fund managers are finding out if you can't beat them, join them. Here's some analysis from my research assistant, Perplexity. From 2013 to 2022, only 20% of hedge funds outperformed the S&P 500. From 1994 to 2003, the S&P 500 has beat every hedge fund manager out there by the average of about 3% a year. And the results have been even greater for the QQQ. And this is why passive investing has grown so much in the United States, growing from about $23 billion in 1993 to over $10 trillion according to this research report here. The more money that plows into the passive index funds, the more that these big tech stocks continue to grow and to win bigger.
It is becoming harder and harder and harder to beat the S&P 500 or the total market index for the very simple reason that more and more people are crowding into these products. That drives up the prices of the names that are in the index. It drives up the largest names within the index even more.
So what does this mean? Every time your employer does a match or you plow money from your 401k into the QQQ, you're going to be improving the balance sheet of MicroStrategy, who will use their balance sheet to issue more shares. And then they will buy more Bitcoin with that cash at higher and higher prices. Saylor believes this is the prudent thing to do because Bitcoin is growing faster than their ability to acquire other companies, to invest into R&D, or to grow themselves from their internal operations. This illustration depicts this well. So as passive investors plow into MicroStrategy, MicroStrategy will plow into Bitcoin. This builds higher floors and higher bases to build upon. As we think about passive investors coming to Bitcoin, there will be many more passive investors coming in the future, like Metaplanet, who's passively investing 4.5 billion yen to buy more Bitcoin. Investors like Riot, who just bought 667 more Bitcoin at about $101,000 per coin to bring their total treasury to just over 17,000 Bitcoin. Passive investors like Similar Scientific, who just bought 211 Bitcoin at about $102,000 per coin to bring its treasury to just over 2,000 Bitcoin. The ETF buyers now own 1.3 million Bitcoin, or about 5% of the overall total supply. And this happened since January. What about nation states? Nation states like Russia, who've leaked plans to build a Bitcoin strategic reserve. Hey, before we go any further, I wanted to take some time to emphasize the importance of buying and holding and self-custodying real Bitcoin, and not just buying Bitcoin proxies like MicroStrategy or ETFs. That's why the Bitcoin way exists, to teach you how to do this and how to do it the right way, to help you remove risk of losing your generational wealth. Members of their team will walk you through proper 100% self-custody step by step so you can remove all counterparty risk, stop sharing keys with third parties, and ensure you protect your generational wealth the right way. Go to thebitcoinway.com and schedule a 30-minute consultation with their team. We haven't even gotten into the largest nation state getting into buying Bitcoin, the United States.
You know, the great opportunity in the United States is to issue the world's reserve digital currency. There's about $150 billion of stablecoin currency, and Tether is the leader. But they can't locate in the United States because we don't have a sufficiently clear regulatory framework for issuing digital currencies. If the U.S. normalizes that, there's no reason why U.S. banks and U.S. companies can't issue $10 trillion of digital currency backed by U.S. dollar currency equivalents sitting in U.S. banks. That would be tremendously good for the United States.
But they don't want to compete with the U.S. dollar. I mean, Trump has made it, he campaigned on it and has followed through with tariff threats that they want to keep the U.S. dollar as the global reserve currency. So they don't want to threaten that with Bitcoin.
No, I'm not talking about Bitcoin. I'm saying that the U.S. should allow U.S. banks and U.S. corporations to issue a token backed by the U.S. dollar that would be backed by trillions of dollars of U.S.
Like a stable coin.
Yeah, a stable coin. Tether, Circle, they're stable coins.
But isn't that a big threat to the monetary system, the Fed?
Well, if we actually normalize that, then there's going to be $10 trillion of demand for U.S. treasuries. It's the best thing you could do for the dollar. What it means is that all 8 billion people on the planet will be using the U.S. dollar on their Android phones and their iPhones in order to trade with each other. That would be great for American values and the American currency.
Tether, which was mentioned by Michael Saylor, will be a perpetual buyer of U.S. treasuries and hard assets like Bitcoin and gold. According to its last report, Tether owns over 84,000 Bitcoin, which is valued at about $8.4 billion today. This is why expectations for MicroStrategy and Bitcoin's prices are so huge. They have perpetual buyers and bidders for this scarce, desirable asset. Households, corporations, pensions, endowments, central banks, and countries are all going to own Bitcoin. And that's why the opportunity for this asset class is so large.
We haven't spoken about what's the opportunity size of Bitcoin. So there's about $900 trillion worth of stuff in the world that people own. And if we're talking about money in that what you want to save and persist and exchange later for the goods and services you need, about half of that is people use as money. But people are using housing as money, equities as money, right? Yeah. But you can safely estimate the opportunity for Bitcoin is about $450 trillion worth of opportunity size, because that's the amount of wealth in the world today that people are just trying to save. Like, people are always like, what's the use case for Bitcoin? I can't buy pizza. The use case is keeping your money.
Bitcoiners aren't investing for short-term trades or short-term pops, but for long-term gains and the ability to protect their wealth against inflation and monetary debasement, which is happening to people all across the world, not just in the United States where we have the privilege. This shouldn't be called a Ponzi scheme or frowned upon. This should be celebrated. And that's what hundreds of Bitcoiners from across the globe are coming to Dallas, Texas from April 3rd through April 6th to do, to celebrate this asset class at the best Bitcoin event of the year, BitBlockBoom. It's been running for 8 years and it's getting better every single year. Come to hear from the best speakers in Bitcoin like Marty Bent, Parker Lewis, Guy Swan, Bob Burnett, Gary Leland, and me. Attend workshops to learn about securing your Bitcoin or mining, and come to exclusive events and parties like the Saturday Casino Night. Don't miss the Bitcoin event of the year. Head to bitblockboom.com and enter the promo code BBB25 at checkout for $100 off your all-inclusive ticket. That's promo code BBB25 for $100 off your ticket. This is Dante Cook with Bitcoin Simply. Happy stacking.